Everything you need to know in order to achieve profit and consistency. Trap Trader presents Becoming a Trader.
Trap traders.
So the next section in the trading course is all about mindset. Mindset is fundamental to your trading career. Lots of people will dismiss mindset, think they know better, think it's not important, and think that looking at the chart, clicking buy or sell is that's it. But mindset is fundamental. If you take the example of building a house, the foundations are built first, and then you see the houses get built very, very fast after the foundations are in. So all the hard work is in the foundations. And the same can be said for your trading career. You've got to put all the foundations in place first. So you've got to get in your mindset that when you come into this, there is a certain procedure, there's certain rules and aspects that we look for and wait for this, and then we're going to take a trade. So you need to be in your mindset that this is fundamental in your trading plan. So a few aspects that we need to think about in mindset is, number one, you are not going to get rich quickly. This is not a get rich quick scheme. This is a skill set. So if you treat it as such, like a job, or if you want like a career. So obviously if you was going to learn to be a nurse or you wanted to learn to be an electrician, you wouldn't just go in guns blazing and start pulling out wires, or being a doctor going in and start cutting people open. You have to go through the whole process, the training and getting the practice and understanding that. So the same can be said for your trading career. You need to take this as a career. You've got to understand that you've got to learn and then you're going to earn. So follow the rules, understand it, get used to the charts, concentrate on getting consistency. Consistency is the key. And once you get the consistency and you keep going, then the money is going to come, the profit's going to come. Second thing, you are going to have losses. Everybody has losses. Nobody out there is going to get 100% win rate on the charts with the trades. Certain aspects can happen. You know, we are going to anticipate that what the market is going to do. We're going to have lots of rules that we follow, and we're going to look. And if all our rules are met, we're going to get in that trade. But there could be certain actions that happen. There could be fundamental news, world events that spike the market in the opposite direction. So we are going to have losses. So you need to get in your mindset that everybody is going to lose some trades. You might have the first week, you might have 5 wins and 5 losses if you took 10 trades. The second week, you might have 8 wins and 2 losses. The next week, you might have 3 wins, 2 break-evens, 5 losses. Once it's in your head that you are going to have losses, you've just got to build that consistency. And number 3, this is a career. Like I said before, you've got to treat this like a career, whether you want it to be a hobby to earn you extra money for holidays or to buy a new car, or you want to actually be thinking about taking this as a career and building a full-time income from it. Earning potential from this is unlimited. You can earn whatever you want. So if you work so hard in your job to earn minimum wage or £30,000 a year or whatever it is, and you work very hard in that, you think about this trading and the fact that you can earn unlimited. You could earn £3,000 a month. You could earn £3,000 a week. You could earn £3,000 a day if that needs to be. So think how much effort you give to your job and your career out there, and what your pay is capped at, and then think about this, how much money you could actually earn. It might be 6 months, it might be 1 year, it might be 5 years, might even be 10 years, but it's worth it because you can earn whatever you want to earn. So you've got to have that in your mindset, that the unlimited earning potential. Number 4, with Trap Traders, we have gone through so much charts and different courses of action, and we've tried to come up with the best way of executing trades with the most consistency. So what we've got with all the rules and everything that you've seen in the course before, we have a rinse and repeat system. If you can do this, if you can get that consistency, let's say you start with a £200 account. If you build that consistency on a £200 account and you're following the trading plan, you're using the correct risk management, and you're doing that on a £200 account, and you're building that, let's say that you make 5% gains a month consistently, then you could do it on £100,000 account. You could do it on £1 million account. It's exactly the same. It's following the same rules, the same risk. You would only be risking the same, 0.5%, if the numbers would be bigger. So it's a rinse and repeat. You start small, you build it, you get that consistency. You can have bigger accounts and you can get that same consistency. Next thing, number 5, is don't revenge trade. So if you're in a trade and it comes and it hits your stop loss, you get took out for 0.5%. So your account is down 0.5%. Then you see the price start to come back up and you think, damn, it's going back up. I should have moved my stop, or it's coming back up. I've jumped back in that. So you jump back in that trade because you think it's coming back up now and it's going to where you thought. And then it drops back off and it takes you out for another 0.5%. So instead of losing 0.5% on that trade, you jump back in and you lost again. So you're actually down 1% now. So this is revenge trading. We have the rules. So if you follow the rules, and you see it and you put the trade on and it hits your stop, then leave it. Leave it until the rules are met and we look for another entry. If you get back in that market just because you got stopped out and you believe it's going back up, more than likely you're going to lose money again. And the main thing we want is to not lose money. We want to save you losing money. Next thing is, as I was saying before, don't over leverage. So over leverage means risking too much. As we recommend 0.25, 0.5% risk per each trade as the most. Obviously, if you go and put a massive lot size on and you're risking, let's say you're risking 20%, 25% of your account, yeah, it's all good when it goes into the profit and your money's going up and you think, yeah, this is great. As soon as that turns around, boom, you're going down, you're into negative, and then you're going to lose. Let's say you've risked 25% of your account, your £100 account. It comes down, hits your stop, you've just lost £25. You can only do that 2-3 times and you're going to blow your account, your £100 account. So it's not good to over leverage. You don't get that consistency. And then this all leads back to your mindset, because once you've lost and you've lost 25% of your account, you're going to be thinking, oh my God, I need to make it back. And you'll be taking the wrong trades without following the rules. And it's going to make you feel upset, angry, annoyed, want a revenge trade. So it all leads back to your mindset. Obviously, when we talk about our risk management and what we are prepared to lose per trade, we're comfortable. If we lose 0.5% on our trade and tomorrow we win a trade, we've made our 0.5% back and we've up 0.5% because we go for 2 to 1. So if we lose a trade on Monday, we lose 0.5%. Tuesday, we win a trade and we're up 1%. So obviously, the 0.5 we lost yesterday, we've got back and we're plus 0.5%. So you're confident, even if you lose, you don't have to worry because you've not lost massive of your account. And obviously, when you win, you start to build that account up. So obviously, over leverage is not worth it because your emotions, you'll be up and down like a yo-yo, and you need to, consistency is the key. And the next one, part of the over leveraging and stuff like that, is don't move your stop loss. When we enter the trade and we get the entry and all the confirmations have been met, we followed the rules, we've got our entry, we get in the trade, we're going for 30 pips stop, 60 pips on the wise men, and you put it in there, and then you're looking at your trade and it goes into profit and you think, oh yeah, it's going into profit, we're going up, and then it starts to come back down and it goes negative and you're watching it and it comes right down towards your stop. Let's say it's 5 pips away from your stop and you think, oh no, and then you want to move that stop loss and you want to move it to 40 pips, for example. Now your whole risk management is out because we risk managed on 30 pip stop loss. So you move your stop loss, let's say, to 40 pips, and then the price starts to go up and you think, oh yeah, I've stopped it from hitting it, great. But then price comes back down and takes you out of 40 pips. You hadn't calculated that into your trading plan. You hadn't calculated that into your risk management. So now you've actually lost more money. And if the price is going to hit your stop loss, it's going to hit your stop loss. So moving that stop, people move it and then it comes back down. You've moved it to 40 pips and it's coming back down. Then you think, no, it's going to turn around. I'll move it again. I'll move it another 10. And now you've moved it down to 50. Obviously, you're nearly going to be nearly double then. You're nearly down to 1% if it comes and hits your stop. So it throws everything out. You've got to just set your TP and your stop loss and don't move your stop loss. The only time we would move our stop loss is if we've gone into profit and we wanted to move our stop loss to break even, which we talked about on the Zoom calls. So we could sometimes move our stop to break even so that if price came back, we wouldn't lose any money. It would just take us out of neutral. But we would never move our stop lower than what we set it at. The factor is, what I've spoke about before, is having a plan. You have to have a trading plan. Anything that you do in life, whether you're going to start a business, whether you want to lose weight, whether you want to build a house, whatever it may be, you're going to have a plan. You need to have a plan. If you go into anything without a plan, it's just going to fail. So you need to work out a trading plan that works for you. So inside that trading plan, you're going to have the times of the day that you're free, how much you want to lose, your risk management strategy, what pairs you're kind of looking at, everything like that, how many pairs you're going to trade. We go into that deeper on the Zoom calls. We can talk about that, but trading plan is fundamental to it. As I said earlier, risk management, trading plan, and your mindset are all the key things before you get to the chart and press buy or sell. And the next thing to go on is obviously everything that we talked about with over leveraging, with moving your stop, with revenge trading. You don't need to do any of that, because when you join us on the Zoom calls, on the nightly Zoom calls, and we look through the charts, we analyze setups for the next day, and we check back the setups that we've took that day. And there is plenty of setups happening every single day. Every single day there is a setup. If your stop gets took, you don't need to worry, because we find another trade. You don't need to over leverage. You don't need to move your stop. You don't need to try and trade more than you need to. Consistency is the key. So if we miss the trade, if for example the trade happened and you was at work and you couldn't get it, it doesn't matter, because tomorrow there's going to be more trades. And if you're busy and you miss it, doesn't matter. The next day there's going to be more trades. So again, in your mindset, you need to get into your mind that not to worry about missing the trade. If you miss the trade, there's going to be another. There's 26 Forex pairs. It's open 5 days a week, pretty much 52 weeks a year. So there's always going to be another trade for you. So we follow the rules, and we look for the trades. And if there's nothing there, we come back the next day. The last thing is what I touched on before. Consistency is the key. So it's more important to keep growing that account. And obviously, like I said, we're going to have losses. You're not going to go from 0 to 100. You might go 0 to 10 to 5 to 12 to 8 to 17 to 16 to 21, and keep going up and down like that. But consistency over the long period of time, your account is growing. So consistency is the key, and it beats over leveraging and trying to take too many trades and going, from 0 to 20, then back down to 5, then going back up to 30, then back down to 2, and having that yo-yo effect. Mindset, massively, massively key. And as you can see from the picture here, behavior, which we talked about, having your trading plan, your risk management, not over leveraging and not moving your stops. Action. The action is having everything in place, only following the rules, gives you your results. So your results are getting that consistent and profitable. Your performance, as you're building it, like the little man there, pushing that up the hill. Obviously, if we're building our account and we're pushing it up and up the hill, we're going to get to a point where we've got a bigger account. And obviously, with a bigger account, we're still going to risk 0.5%, but we're going to have higher lot sizes. The 1% we gain, 1% of £100 or 1% of £100,000, we're still aiming for 1%, but obviously the profit is going to be bigger. And attitude, as we spoke about, is all about treating this not just as a throwaway hobby. This, as I said before, this can pay you unlimited. There's no cap on it. There's nothing. Take your time, watch back all the video series, watch it 100 times if you need to, practice on a demo, join the live calls on the night, ask questions if you need anything, and we're here to help you. And that being said, see you on the next video.
You've got the banker in the scope. I repeat, got the banker in the scope.